Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Brigade Enterprises. Will the stock keep going higher or should you avoid the stock? So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Brigade Enterprises, here's a small request that kindly support me on Patreon. And once you do that, it will help me grow the channel. It will help you also ask me questions on a daily basis. Once you get the $10 membership, you will have access to my portfolio, my watch list, and also ask me questions one every day. Plus, you'll have access to podcasts that I put up every now and then on different stocks, markets, and market movement before I put everything up on YouTube. So everything comes up there on Patreon and I am always online there. For detailed market or company talk, you want to have one-on-one with me with a number of stocks in place, you can just email me and we can work things out. Now about the company. Established in 1986, Brigade Enterprises provide infrastructure and real estate services. One of the better property companies that we have, along with Godrej Properties, Sobha Developers, and there's Brigade, deals in high-end property construction across India. Strong business fundamentals are there, and the market cap is around 3,000 to 3,500 crores. If you look at the numbers, and as expected, the numbers for the first quarter has been very dismal. Sales have gone down by around 70% to around 203 crores. Profit is down. I mean, from loss it has come to 64 crores of profit. There's high interest cost and high debt. The return on equity is around 6.6%, whereas the operating profit margin is around 10%. But the dismal numbers mean that the stock has gone up and the numbers have gone down. So if the recovery is there from Q2 onwards, then the stock may sustain at these levels. Otherwise, we will see a retrenchment of the stock prices. If you look at the performance, then the stock is up 150% in the last 18 months. So it has gone up a lot in the last year and a half, but lost something like 60% of its value from the peak in February and March. So it did fall and fall big time from February onwards, but it did recover over 50-60% from those lows and currently trading at 170 180. So it has recovered something like 70 to 80% from those lows. Decent promoter and institutional holding with only 9% free float that is in the market. High debt is a huge concern, that if you're having a lot of debt, then your profitability will not sustain. It is one of the better property companies, there is no doubt about it. So, what are the reasons for the decline? The sector as a whole, the real estate infrastructure sector, has been under stress for a number of years. So, it is not that the current pandemic has put a lid on the movement of the stocks in this sector. From last 3 years, the performance of the real estate sector has not been that great on the stock front. And from the last decade, the performance on the ground with respect to real estate prices has not done anything, and that's why these property companies have always put on more debt compared to the amount of cash that they make. So that's one point that is there. Current scenario has also deepened matters, and the matters have become extremely worse, and that is the why stocks fell even more when you saw that what happened with some of the real estate companies, IB Real Estate, etc. And same happened with some of the good quality companies, Godrej Properties or Brigade. Now, the thing is, many of the investors or analysts believe that the sector may take more than a year to come back. At least it will take a year and a half to really come back into fashion. And over the last 10 years, over my investment career, I have not seen real estate infrastructure really do well. The only time it did well was between 2003 to 2007 8, and then it has just gone into doldrums and because of high debt, etc. And even at this point of time, people are avoiding debt, so the sector may remain under pressure, although stock prices may move up and down, but the movement might not be sustainable. So investors are looking for safer bets which could grow, compound 15, 20, 12, 15% year on year over many years, and consumption is the way to look ahead rather than looking at high debt companies. So that is why these companies never perform at the same level as other consumption companies. There's concerns on executions of projects and funds. So if the projects are not executed fully, then where will the funds come through so that the projects complete? Many of the projects do not complete in this sector, and you need to understand that this is a high capex business. High gestation period is there. A lot of problems are there with respect to the kind of the business framework that real estate companies have or property companies have, and that is why there is not high PE that is given to such companies whenever, even if the companies are doing well. So it has been completely stalled in April and May, the business, and currently also it is not a huge pickup in the business, although stock prices have gone up. So you need to understand that in that regard, uh, it is more safer to avoid this sector as a whole. If you look at the technicals of the stock now, trading just below 200 DMA. When I made this video a couple of weeks back, it was trading at around 130, 140. Currently it is trading around 170. It has moved up, and 170 is the 200 DMA, so it could be on a cusp of a major breakout, but there could be a situation that it is a huge resistance and the stock may reverse from here. So you have to be extremely careful here. Strong support lies between 130, 135 levels, around 128, 130. So if a decline of 20% comes in, that is the best time to probably add on if you really want to. Short term support is around 155. Below 155 it becomes extremely weak again. And heavy up move is only expected above 180, 185 levels. When it clearly goes past 185, then you can take a trade with a stop loss of around 155, 160, or 20% stop loss, and see how it goes. But really, to tell you frankly, I believe that there could be a reversal on the trend on the stock. If the market slightly reverses, these stocks will fall even more. So, in my opinion, it is an avoid. If you have not bought the stock, if you are not in this sector, do not get into this sector. On major declines, buy the consumption plays. That is even better. I put up many videos on different consumption stocks and talked about whether to go ahead and buy or not. If I were you, whether I'll buy or not such companies. If you're holding the stock, then hold and keep track of the numbers and keep your stop loss, trailing stop losses go up. So something like you can say 155 could be a stop loss right now. 150, 155, hold the stock. Let's see if better development comes in. Probably your price would come in if you're bought at higher prices. If you're bought low, then you can book out profits at around 180 levels. That would be what I would be doing. Take your own call. Again, disclaimer applies. If you really want to get into this sector, have a good 5-6 year view, and whenever this sector jumps up, whenever these stocks jump up 60, 70, 80%, 100%, you just get out. Do not hold the stock for say 4 or 5 years time frame. So it is a very good company in a lagging market, but first of all, the sector has to be right. If you're not in the right sector and you're holding the best of the company, your returns will be curtailed. So this was my video on Brigade Enterprises. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.